Hi, I'm Clifford Bennett, Herston Economics. Dow Jones again higher every day. It's a great bull trend, as we've been saying for so long. The interesting thing for the ASX market, though, the Australian market, is ASX SP200. Herston Economics sent out a report yesterday. We've identified a really interesting technical level, for those of you who are technical, around 4,965. Market breaks there, it can go 5,200, 5,400 very, very quickly. All of Asia's taking off at the moment. Asian equity markets are way too cheap. In fact, equity markets around the world are cheap, cheap, and cheap. It's just bargain basement levels still, despite the strong rallies already seen. We have global growth exceeding anyone forecasts, except us, of course. And we have corporate profits, fabulous. We have healthy balance sheets. Companies are making more money with a leaner machine, with a healthier balance sheet now than ever before, and they're still at half their valuations of the pre-GFC. Equity markets are so cheap it's ridiculous, so markets are going to go a lot higher. For a couple of years now we've been saying the Dow Jones will hit 18,000, 19,000 in about 2 years from now. We had that initially as a 3 to 4 year target. ASX target is around 8,000, 9,000 in about 2 to 3 years. So plenty of upside. Markets are cheap. Anyone who tells you markets are overbought at the moment, they're just looking at recent history. They're not looking at the next several years ahead of us. So, you've got to see this in a big long-term historical sense. It's going to be overbought all the way up because it's a market that's playing catch up to reality, a really positive reality that all the US investment research houses, major brokers and banks last year told you wasn't there. They tried to tell you, scare you out of the market, all sorts of fictional stories about disintegration of Europe, double-dip recessions, China bubble, all fiction, pure fiction. The reality is very strong. Equity prices still don't value it at all. US data last night, we had manufacturing up 0.3% in December on top of 0.3 in January on top of 0.9 in December. So what we've got in the US at the moment in terms of data in the last couple of days is manufacturing is up 1.2% over December, January. Retail sales are up 0.8% over December, January, and that's that period where they had all that bad weather. So those statistics will click up rather strongly in the months ahead. It's a very strong US economy. China, as I said yesterday, those of you who had brokers telling you to sell the Aussie because China had inflation, change your broker. We can see that was a good call because the Aussie's up above parity and people need to buy it now and it's going to go a lot higher. So overall, the outlook for gold, as we've been saying, is very good. It's ticked up. Oil, we were hoping to get 83 to buy everything we could for our children and grandchildren. It might have already bottomed. It might be getting away from us now, so you need to start buying oil again. But overall, the outlook for equity markets in Australia, particularly resource stocks, incredibly low, and buy them. The only risk to the Australian economy is the Reserve Bank losing the plot again and raising rates. We certainly hope that won't happen, and our forecast is still that there will only be one 25-point rate hike this year. So all bullish, and buy those cheap stocks while you can.